Welcome to chapter 27, the last chapter in our book for this semester. Yay. Well, we won't celebrate quite yet because we still have to get through this chapter. We are going to focus on financial statement preparation, and I am going to cover learning objectives 1 and 2 in this video, and then pick up the learning objective 3 in the next video. What we're going to do is we're going to prepare a 10-column worksheet for a manufacturing company. These are the steps that we're going to do. We're going to prepare a trial balance, do our adjusting entries, prepare an adjusted trial balance. Then we're going to extend the adjusted trial balance accounts into the income statement and balance sheet columns. And this will all be clearer in a minute when we start going through the columns. And then we'll total the income statement and balance sheet columns to compute our net income or loss. And so the trial balance is prepared using the balances that are from the individual ledger accounts. So the balance that's left in all of these accounts, whether it be a debit balance or a credit balance, is entered into the worksheet. And I think my screen isn't capturing this entire slide. I'm not sure it's going to. Okay, and so note that because we're dealing with a manufacturing company, we've got 3 inventory accounts here. And we are also using the perpetual system. So we're accumulating the cost of goods sold on a real-time basis as opposed to making adjustments at the beginning and ending of the period. We have actual overhead costs incurred, and then our applied amounts applied to production. And we're going to use both overhead amounts, the actual and the estimated, because those are useful when we prepare. And then we've got our taxes for our corporations. Now we're going to prepare our worksheet, and here's where we're going to start. And I'm going to pause this video for a second because I think I'm clipping out the very bottom of this slide. Okay, well, it may be a little better, but not a whole lot. But our last entry here on the bottom of the page is capital stock for $75,000, which hopefully you'll be able to see. Now, you'll notice that there is an A next to our first transaction here in orange. If you go to your book, chapter 27, and depending on which version of the book you may be using, which edition, you will hopefully find these exact numbers. And I won't tell you the page number because depending on which edition you're using, the page number will be different. But if you go to learning objective number 2, you should see headings under the various sections under this learning objective with the letters A, B, C indicated next to them. And so those letters will correspond to the letters that you see here next to the various entries so that you can see some additional information on how we got these numbers, where they came from. So in this case, our first adjustment that we're going to do is we're going to apply overheads to our work in process inventory to jobs we still had in process at the end of the year. And then we've got applied overhead credited to the factory overhead account. And I should also add that in your book, there should be at the end of this series of transactions, there should be a sideways version of the entire worksheet. What you're seeing here is the bottom half of the worksheet, and that's the top half that we were first looking at. So hopefully this will help you kind of orient yourself a little bit. And you may want to have the full page open in your book so that you can maybe follow along a little bit better. So meanwhile, now we've got the applied overhead credited to the factory overhead account. We've got some supplies that were used during the year, and those are indirect, and so those are part of our factory overhead. We've got some expired factory insurance. So we had some prepaid insurance that we had used up. So we have to credit that account for that amount of insurance. And similarly, insurance is also going to be part of overhead. We've got depreciation on factory building and equipment, which we need to account for. We've got two different entries, one related to the building, one related to the equipment. And similarly, that's going to go into overhead, but we'll just lump those together into one entry. Now let's look at it in terms of the T accounts and how this flows through from a T account perspective. So this is our application of overhead to our work in process inventory. And our factory supplies. And so this is all this is just the overhead account and seeing how these various transactions that we just reviewed from a worksheet perspective look from a T account perspective. Now, more overhead was applied than was actually incurred. So we over applied the inventory or the overhead, excuse me. And it was over applied by $1,062. So we need to make an adjustment. And what do? We adjust our cost of goods sold to reduce that by the amount of the over applied inventory. We have some accrued interest on our bonds payable. And then we've got an estimated amount of uncollectible accounts at the year end was 1,865. So we've got an adjustment of 1,405 that's needed because we had originally allowed only 460, but turned out it was more than that. And then we have a bad debt expense for the 1,405. Got depreciation on our office equipment. And so the question is, why does this not go into overhead? And why instead does it go straight into cost of goods sold? And the answer is, since it was on office and not factory equipment, it's not part of the factory overhead. We've got income taxes for the year, 30,300, and we had already recorded 23,000, so we needed to record an additional 7,300. And we owe that money, so that goes into a payable. After we have all of our adjustments made, we can now go back and prepare our adjusted trial balance, which is the next set of columns over. And all we're going to do is take the trial balance numbers, and if there's no adjustment necessary, then we'll just carry our trial balance numbers over into the adjusted trial balance. But if there is an adjustment necessary, then we will net out the adjustment or add as we need to get our adjusted trial balance figure. And we go through and do that for each of our accounts. And again, this is only the top half. This is now the bottom half of our worksheet. And you'll see that when it got to our inventory account, we just did it as one big chunk as opposed to each of the overhead account. We did it as one big chunk rather than each of the separate entry adjustments there. And we now have our adjusted trial balance, and we're now going to take the adjusted trial balance, which was the last statement, or the last two columns we just created. We're now basically shifting over this worksheet, and we've now got the adjusted trial balance, and these are two new columns, which would have been all the way to the right if we could have seen this entire thing. And we've lost the first two columns, which was the trial balance and the adjustments column, which are kind of to the left over here if you envision this all as one worksheet. And so now we're going to extend the adjusted trial balance calculations into whether they're income statement or balance sheet, into the various accounts. So we're going to start here, and we've got our balance sheet accounts first here, and then we'll hit the bottom half of our worksheet, and you'll see here now we've got income statement amounts that get extended over. And so factory overhead is not extended because its balance is 0, since all of the actual overhead has been applied. And we then compute our net income, and the cost of goods sold gets calculated in here, as well as all of our various expenses to get our net income. And now we have completed our worksheet. And I'll let you read this as I stop this here and move on to the next video for learning objective number 3.